Hello there, and welcome to week 9. We have quite a lot of information we're covering this week. I'll do the best I can in the 10 to 15 minutes I'll spend with you. So we're covering two topics this week: financial management and advocacy slash lobbying. I'm going to spend more time on the examples I provided to you than the information on these slides, but nevertheless, let's get started here. So the main thing I would like you to remember from this slide about chapter 12 is the difference between bookkeeping and accounting. So bookkeeping is the methods and systems of recording financial transactions, and accounting is the rules of classifying and recording financial transactions. So there's a difference between the type of financial accounting that's published for outside use according to GAAP principles and other ways that auditors in the accounting world view things, and the type of managerial accounting that we use to manage programs. I don't know how familiar many of you are with the difference between cash and accrual basis and the real specific terms like permanently restricted, temporarily restricted. I hope to have some time to go over the financials I provided for you from my organization from 2012 to articulate what some of these items mean. And of course there's budget management, which has to do with how do you budget? Do you budget for break even? Do you budget for incremental? What type of policies and controls, and the main financial documents, which a lot of folks who go through programs don't get exposed to these specifics. Perhaps you have been. I know, being a social worker by training, I never had a financial management course, and when I became a executive director, I had to school myself, mostly with the help of others on my board. These are some of the sheets and information that I provide you in my handout. The only one I would point out to here is UBIT, which is unrelated business income tax, and that is the type of thing, as we learned in talking about social enterprises, that one has to be concerned with. Because I have a lot of social enterprise activity, I have to file what's called a 990T, which documents the activity that may be subject to tax. We usually don't get taxed, because unless you're earning more than 10% of your annual budget, usually the IRS doesn't look at that. These are different ways that we look to price things and project costs, and I'm going to go over this in the pro forma example. Regarding advocacy and lobbying, I'd like you to remember two things, and that is the difference between them. So advocacy is an action taken in support of a cause or an idea. Lobbying is an action taken to support or oppose legislation. And of course, political campaigning is supporting or opposing a specific candidate. Now, the tests that get applied here are whether or not, as a nonprofit, you would be in violation of lobbying. Is this less than 5% of your activity? Are you spending less than 10%? And on your reporting, on your 990, whether or not you're spending more. I think this limit has been increased now, $24,500 on a lobbyist. So this doesn't mean you can't lobby and you can't be political. It just means you have to live within the rules. So a lot of times in these types of organizations, we talk about educating the project and not so much lobbying or even advocating for a specific position. And my PowerPoint presentation goes into a lot of detail. I think I may have mentioned to you, you may have read in my background material, that I was in elective office for 4 years as a city councilman in the city of Riverside. And I've been very active politically, and I believe that's part and parcel of being in the public arena, even if you are in the nonprofit public arena. So in terms of the financials, I'm not going to have a lot of time to go into this, but what this highlights for you, if you can follow it, is I wanted to show the difference between some of these concepts. Cash is easy, it's cash. Accounts receivables, B, are things that you may not have in hand but you're going to receive. Those are assets. And C are prepaid expenses, things like insurance and rent down payment that you pay ahead of time, and these add up to be your assets. When you add in your other property issues, such as E, I own 5 buildings, my organization does. What gets booked is the value of the building when it was purchased, not what it costs right now in time. So actually, these numbers are much higher. In fact, we just had the buildings alone appraised, and they're almost 13 million. And there's also other property in here, so there's actually more money than what this looks like. But those GAAP principles of accounting allow you only to book at cost of when you bought it. The G are accounts payables. Those would be things that you own, and this is a snapshot from a statement at June 30th, year end for us, fiscal year in that year, what we owed to be paid, some other liabilities. The L factor is what's called the current ratio, which we're upside down this year. You actually should have more assets than you have liabilities, or at least 1 to 1. Most banks require 1.25 to 1. And so this is also when you go to get a car loan or a mortgage, what banks are looking at, not just what your overall net equity is, but whether or not you have available assets to pay off the loan, should they call it. And then you add up total liabilities, which is J, and you end up with K. So that's net assets in a nonprofit, but that is really net worth. That is the same thing at the end of the day when you fill out a financial form to get a loan. When you add all your assets, subtract all your liabilities, do you have any net worth? Now, because of what I said earlier, our net worth is actually more than that 2 million, because those buildings were worth a lot more. I'm not going to be able to go over the other forms, but you might be able to look at them, and if you have questions, you can give me a call, but they're meant, or drop me an email, and I'll be happy to address them. They're meant to be examples, which I usually spend a lot of time in class going over, but what I did want to show you was the pro forma that you're responsible for. So this is the worksheet that goes along with your project, and a pro forma is just projecting out over 3 years what your revenues are. And you can see here I give you the definitions: revenue from foundations or grants, contracts or government and other service agreement, donations, fees and sales, other miscellaneous, the expenses, the salaries. I'm asking you just to use 25% of your salaries for the benefits and taxes that you would pay, insurance and other things. Insurance is the liability insurance of the project, program specific costs, which you may detail out more. And then I'm asking you to just use general expenses for normal and customary expenses to run the operation, and administrative expenses of 10%. That gives you a 25% what we call indirect cost rate, which is close to the indirect cost rate I have with the federal government on any contract that I can get. I can charge them 25% over and above the specific cost of the contract. That's how that works. Then you have an excess or deficit. If you have in-kind donations, strike the word bust. That came from a different presentation, and that gives you your what we call the below the line, the real assets that you have. In kind is not something you that is actual money, but it's something you can use as match when you're required. This is an example of the mobile fresh program that I showed you the video of, and this shows you actually a 5-year pro forma. And this is what I'm looking to get from you on your project of projecting out. I expect you to be a little less optimistic. You know, anywhere between 50 and 100,000 is fine. I just want to see that you're putting some thinking into the concepts of what you will be spending money on, where the money will be coming from. This projection, at least for the first 3 years, actually was pretty close. We're in year 4 now, and the fees and sales are actually on target. We're still trying to line up funding and grants, which are probably going to be higher than that by the time we're done for next fiscal year starting July 1. So this gives you an example of how you do the pro forma, and once again I'd be happy to answer any questions regarding that. The other item I had for you was switching over to advocacy and lobbying. So this is a presentation I've used in various types of situations to try to convey to people that they need to be more political. You are in a public administration course, so you're going to be political whether you think so or not, or I guess public administration profession is your interest. Now, so I think you need to ask yourself these questions. You know, what does it mean to you? Why might you need to get more political, and what are your concerns? And I go through, this is more or less like a self-tutorial of what the regulations and the rules are, because people often get confused and are not correct. These are what they actually are and what they amount to. I find it very useful to be political, both in my role as a director of a nonprofit organization, but also as an individual and a participant in society. I make a strong case here for why nonprofits need to be involved, and why we're at the forefront of a lot of movements and have been for just about every health and social issue that has undergone a political process has been started by a small group of individuals, as the Margaret Mead saying goes, which often organize themselves in a nonprofit organization. Here are some ways that I think you can do this, by first of all being at the table, maybe starting a movement, educating, maybe getting yourself elected. I'm sure if I had the opportunity to discuss this with you, many of you would probably harbor that aspiration. The next steps that you can do to get things going, and you see, you start with education. You get elected officials, you hold them accountable. One of the first things I did when I became the head of a local executive director association of nonprofits was I started holding forums around the elections to ask candidates questions that applied to the nonprofit sector. And this was a way of educating them, because if they didn't know the answers, we, through the discussion, were able to educate them, and also to get people and staff involved. So I have a rule in my organization where anybody who's a manager or above needs to spend 20% of their time outside of the organization, involved in the task force, being on a board, doing something where they're hearing or contributing. And that leads to the thoughts from Peter Drucker in Post-Capitalist Society about the difference between patriotism and citizenship in terms of contributing, and about nonprofits providing the glue in communities that bring people together. These are my 10 top approaches, which have been covered before, and these are just some of the real specific rules. So this is just a very quick treatment of two very involved topics, and as I say, hopefully maybe more on the discussion board or in other ways we can discuss these in more